Great. So welcome everybody that is tuned in on our webinar here. I am Mike Kirkpatrick. I lead the financial services practice here at Mad Pow. And we're eager to share some findings from a recent study that we commissioned internally. As experienced designers and strategists, we're constantly taking a look at behaviors in the world. And with the given pandemic, thought would be a good opportunity to take a look at how consumer behaviors and consumer expectations may have been influenced by the recent pandemic. So we look specifically at the financial services vertical, and really we were looking for to answer really a few key questions. Before I get started, just as a program note, you can follow the slides in the handout section if you don't see them currently in the control panel of your webinar. I think it's on the right side, at least on my screen. And you can also ask questions and filter those in through the chat. So at the end of this, we should have some room for Q&A period. So we'd encourage you to share some questions with us, and happy to answer them. So as I said, we commissioned this study and wanted to answer a few key questions. One is, given the change in how we're able to interact with financial services companies and brands in general, we were curious to look in on how consumer mindsets around digital and physical interactions may have changed. So we are going to share some of what we found there. The other key question was really, given that I just was talking in the preamble before we started, that many companies have been highly adaptable through the pandemic and changed their methods of delivery pretty significantly. The question I wanted to dig into was, in that adaptation, were there any gaps in the customer experience that were exposed, things that were undesigned or not thought through? So we'll share a little bit of our thoughts there, and then we found things even that we didn't expect. So we're really eager to share all of what we learned, and like I said, we can answer some great questions at the end.
Thanks, Mike. So hi, everyone. My name is Jen. I'm an experienced researcher here at Mad Pow. I worked with Mike on this study. So I'm going to start by explaining what we did to address these questions, these research questions we had. So Mad Pow conducted 16 45-minute in-depth interviews. We did this over the phone, and participants were asked to share their experiences and interactions with banking and investment providers, both before and during COVID-19. In terms of who we spoke to, we were looking for individuals who have some management over their finances, as well as those who had previously visited physical locations prior to COVID-19, so at least 4 times a year. I do want to call out that this was a friends and family recruit, but we did really strive for a diverse recruit, including geographic diversity, socioeconomic background, to include a range of perspectives and experiences with financial service providers. So let's dive in into what we learned from those posed research questions that Mike shared. So first, we wanted to know, how has COVID-19 changed consumer interactions with financial service providers? And a really quick answer, it really hasn't. From what we heard, there wasn't anything that had drastically changed in terms of these interactions. Here's one participant saying, "There's been nothing in our financial life that has changed dramatically or really at all." And why might that be? Why might it be that we were seeing this trend? Many participants rarely interact directly with their financial service provider as a baseline. These interviews were conducted in May. So especially since the period that stay-at-home orders began, things could have been in steady state, and there wasn't a drastic call to have a direct interaction with a financial service provider. Here, a participant explains, "Beforehand, my MO was to pay as little attention to it, my financial service provider, as possible, and interact with it as little as possible, and that has not changed." And in fact, most participants are served really well digitally, so the inability to interact in person hasn't impacted them that much. In fact, the majority of the participants we spoke to stated that even before COVID-19, they prefer to interact with their financial service provider digitally. They see it as more convenient, more efficient. With investment providers, this precedent already stands. It's really common to see remote-only relationships. Perhaps participants are using an investment provider that lacks a physical location to begin with, or individuals who live in another state from their advisor. We were already seeing this remote relationship with investment providers. But otherwise, participants are using websites and apps to routinely check accounts, pay bills, transfer money, just kind of keep things at a baseline.
And I think, Jen, just, this is not surprising, right? All the investments that companies have made in digital apps and digital tools are yielding results. And when I think about how mature some of those experiences are, we're not talking about version 2 or 3 of those applications. We're talking about version 50 or 60 perhaps. So not surprising, but I think there's a cascade effect to that investment that we'll talk about in a little bit.
Yeah, exactly. And we heard from some participants, particularly those who were on the older side, who reflected on this evolution of the digital transformation and how much they appreciated that even before COVID-19. So the current digital experience, as we were just discussing, of most financial service providers is pretty good. So when we asked participants just up front, before we even talked about in-person or digital, just what did they like about financial service providers? A lot of them mentioned the ease of use of websites and apps, so the overall quality of them. Here you can say someone said, in terms of what they liked, the overall quality and ease of use of their online tools. That was really an important factor to me, and it's certainly no less important now. As well as the ability to bank from anywhere, so the convenience of using these digital experiences. Someone saying, I don't want to leave the comfort of my house just to deposit a check. Or another participant, I can bank while camping with my kids. People really appreciated the current digital tools. Mike, any other thoughts around the digital experience?
I guess the only other observation is really around the fact that I suspect many folks have gone deeper in terms of their experiences with these mobile applications and online experiences. So whereas many have been using the app, there are some that may have been reluctant to use tools like mobile deposit or online transfers with a banking application specifically, and perhaps now have explored that for the first time and really been impressed upon as the ease of use. And once, experience, I've always felt is a funny thing because it's kind of undebatable. Once you have a great experience, it kind of speaks for itself in a lot of ways. The first time you used Uber and kind of got out, it was like, oh my God, that's so much better. It was undebatable and kind of spoke for itself. So I feel like perhaps something worth tracking is as people have gone maybe a little bit deeper and used tools for the first time and maybe had a little bit of that same experience, it'll be interesting to see if it sticks.
Definitely. And yeah, we'll talk a little bit about that, about people going deeper into the digital experiences. But I think on the flip side as well, something we observed, there is also some sentiment of a general expectation of a digital experience. And one where we heard from a couple participants where that may have been lacking was in credit unions. So the participants we spoke to, they really loved the credit unions, but they did sort of mention that they had lagged behind in the digital experience. And that was something that they observed and wanted, and it has improved over time. But I thought that was an interesting caveat of expectation around credit unions.
Well, I'd love to just build on that, and then we can continue through. With credit unions, I'm talking to a lot of folks out there from various size institutions, and I have spoken to some credit unions of various sizes, some locally here. I actually belong to one here locally, and I can tell you that their profitability model looks much different at a credit union scale than your large banks. So as a result, they have to choose their investments wisely, and I'm sure they're investing in digital just as others are,
Yeah.
there's just less investments to make overall across all the things they're trying to do operationally and so on. So that's not surprising to me, but it's interesting that that was validated a bit.
Definitely. Yeah, so we'll dive in a bit into these digital interactions, and we'll start with actually what about the in-person interactions? So this is where we expected that we would see the biggest impact from COVID-19. So let's start with understanding preference before COVID-19. So in terms of the participants we spoke to, about a third of participants said that they prefer to interact with their financial service provider in person for personal connection and speed. Even individuals who prefer digital experiences, though, they did mention some need for in-person interaction. So they might prefer digital, but they still recognize the importance of having a physical location. So in fact, they say that it was 1/3 to 2/3 about what the preference was, but there was a 50-50 split when asking participants just whether or not they thought in-person banking was important or not. And in fact, one participant mentioned that it's not necessarily it's important, but it's mandatory. So this was a restaurant server who was explaining that while they prefer to interact with their financial service provider digitally, they have to deposit cash tips, so they have to have that in-person interaction. So participants described this various level of need for in-person interaction, which influenced their experiences during the pandemic.
Right.
And in other words, those with more of a need for an in-person experience would have had more of an impact from COVID-19.
Yeah.
So we're going to dive into those different needs and reasons for banking in person and how they've changed. So first, we sort of heard that dropping by the bank is a default behavior for some. And here's in one participant's own words, I live a 1-minute walk from the bank. So if I need money, if I need to deposit a check, I would just walk over there, check my balance. As I'm saying this, I don't know why I didn't use digital tools. I think it was more just I never really had a need to. So here we're sort of seeing it was easy to bank in person. It was the default behavior, just kind of going in that direction. So visiting a physical location is a well-established behavior for some consumers. Before COVID-19, even participants who prefer online banking said they might pop into a physical location if they're nearby. Wasn't a big deal. And in fact, across the board, we heard some participants, whether or not even if digital was their preferred interaction, that a physical location still had some influence into the banking provider they chose. So there's still this idea that it's a well-established default behavior. If I can deviate to the digital world for a moment, before COVID-19, a few participants called out their appreciation of online chat. I sort of see it as the digital equivalent of banking on your own time, because you can multitask, you can avoid talking on the phone, maintain a digital paper trail in some sense. So then how does this translate to the behavioral impact during COVID-19? So some participants, they talked about how they miss this ability to just drop by their bank, but have switched to digital alternatives for key tasks. While this wasn't something we directly heard in the research, we can extrapolate that online chat, which was so valued even before COVID-19, will become more important and leveraged during this time.
There's a couple just things I would love to add here, Jen. One is I mentioned the cascade effect of the maturity of the experiences out there digitally, and with them being so great and sufficient in a lot of cases. This is totally anecdotal. I know you didn't prove this out in our particular study, but anecdotally, I've seen that there's just less of a hustle and bustle within the physical location. So if you do work, like I work nearby a branch in the Boston office, and if I look over at the line, there's almost never one there. So I think a lot of people's reliance on the digital channel has sort of opened up a more pleasant experience when you do decide to pop in. Whereas I doubt you'd pop in as much if there were long lines and it just was a lot more of a hassle. So that's a bit of a hypothesis, I suppose.
That's an interesting point you brought up, and but something that we did find in the research. We did sort of try to dig into why even before COVID-19, participants didn't want to bank in person. And there was this perception around long waits, and I don't really want to have to deal with that. But then most of these participants would correct themselves afterwards, and they're like, oh, every time I do go in, it's a perfectly pleasant experience. So there is this perception that I don't want to have to bank in person, long lines, but to your point, they have done a good job in terms of customer service and low wait times that create this nice experience when people do go in person.
And default behaviors are always interesting to me because at some point, sometimes in history, they defy logic, like the logic is gone, but the behavior persists. I heard a client of ours who will remain nameless here was talking to them about their branch experience. It wasn't a bank, it was a financial investment institution. And post-COVID, they were sort of anticipating what was coming. And I was surprised to hear that for stock trades, they still have a class of users that call their 1-800 number to make a trade. Oh, actually, it was to look up a stock price. It wasn't even to make a trade. So if you can imagine how much more convenient that has gotten on mobile devices and electronically, yet some people are just so attuned to calling the 1-800 number and asking the price of an Amazon share. That was surprising.
That's interesting. I think that kind of resonates with this quote here. They're saying, I don't know why I didn't do this earlier. It's sort of COVID-19 was the impetus to make the change. And we'll share a little bit about that, about those individuals who switched over to digital interactions. So we talked about default behavior, but sometimes consumers interact in person because they have to. It's their only option. So one participant, they shared a story of how they needed to get coins for coin-operated laundry. And when we spoke to this participant, they had already gone to the bank twice during COVID-19. And they described that it was really crowded in the vestibule of people waiting, which seemed unsafe. And the first time they went, they were actually turned away because the bank didn't have any coins. And that was really frustrating because they already felt like they had to leave their home once, and now they're going to have to leave again. The second time this participant went to the bank, they were told to wait. A representative took their $20 bill and went inside, and they didn't know what was happening or how long they'd have to wait for. They couldn't leave because the bank representative still had their money, weren't sure what to do. And eventually the bank representative came back with their coins. And here's that participant reflecting on that experience, saying, it's just kind of hard that in this time when we are being asked to do so much more laundry and to be really clean, and was before considered a basic necessity, has become so challenging and also in some ways risky to one's health. So before COVID-19, some interactions like this had to be in person, getting coins, small bills for businesses, depositing certain checks in cash, printing checks, fixing quirky problems. Though it might not have been the preferred interaction, it's just what you had to do. And so now with COVID-19, some participants expressed frustration that they had to even do this. And many wanted change even outside the purview of financial service providers. So for example, wanting to pay rent electronically, or no coin operated laundry, or maybe no physical currency altogether. During COVID-19, these participants have and they will still go to the bank if needed, with necessary precautions, though more warily. So we did hear, though, that some participants are discovering alternatives to physical interactions where possible. So things that they thought had to be done in person, and now they're realizing that there are these digital alternatives. So some participants adopted digital technologies to accomplish tasks they previously did in person. So some examples we heard were mobile deposits via the bank app. That one was very popular, of participants using that. Connecting accounts to pay bills and transfer money for the first time, using secure networks to exchange tax and other financial information during tax season. And several participants, they expressed delight when they discovered they could do something digitally. As Mike and I were discussing before, some participants didn't know that this was a possibility, or maybe they kind of knew in the back of their head, but they didn't really have any motivation to switch. And here's one participant explaining, my daughter has been using the bank apps and I started using them to deposit checks, which is really very convenient. I don't know why I never used it before. Now that I started doing it, it's great, so much easier. Mike, any thoughts here on the going deeper into the digital experiences?
Yeah, it's maybe more related to the point you made previously around, you know, the person you spoke to that was trying to get change for laundry. We live in such a digital world at Mad Pow, like we're always at the forefront of creating experiences digitally that it can be easy to lose perspective that people are still using cash and coins and so on. And you know, that was something that resonated with me, that participant and their comments, because we talk a lot about the rising expectations around digital experiences that have been mostly attributed to the Amazons or Zappos or Facebooks of the world. They're driving a lot of the art of the possible in the minds of consumers. What's been interesting through this pandemic is we're seeing such an adaptability in every industry out of survival, need for survival of the business. And I wonder if that is likewise going to have people saying, well, why not? Why can't I get my coins sent to me? Actually, you know what? Why do I even need coins? Why can't that washer machine take Venmo? I wonder if it'll open up that kind of even more higher expectations. And I guess I wonder if companies will, who have maybe, you know, especially in financial services, regulatory pressures have constrained a lot of that art of the possible. And now with no other alternative, you know, just again, anecdotally, I did a closing during the pandemic. I had to do it over Zoom. They never would have imagined doing that as being secure enough or as being possible prior to the pandemic, yet we did it and we did it safely. So I'm really interested about that impact, maybe more longer term.
Definitely. And I do think that during this time, it's definitely revealed not just the health implications, but the convenience as well. And that segues nicely into our next slide here that I wanted to share, is that how this discovery highlights the idea around both health and convenience. So in this time, consumers are motivated to protect their health and the health of others. So they're using these digital alternatives, as you were just sharing, Mike, like closing over Zoom. But as a byproduct of this, consumers are kind of seeing the general convenience of these digital alternatives and wondering why they can't continue or keep doing this. Here's one participant stating, I'm doing all my stuff online and loving it. Every time I don't have to drive to town, it's saving me hours and days when you add it all up. So sort of inspired by health reasons, but now realizing how convenient it is. There was another participant who shared a parallel example to financial services. They started using Instacart for the first time during COVID-19. So you mentioned Uber, Venmo. So here's someone using Instacart. And when she started sharing the story, I thought it was probably, to not risk exposure in the grocery store. And maybe that was some of it. But a participant explained that she felt like lines in the grocery store were too long and she can save time by using Instacart. So sort of these new tools that people are experimenting with that may have been motivated during this time, but really just highlight the general convenience of digital alternatives.
Yeah.
So sort of this point here, I think, is exactly what you were saying, that though many participants will still visit a bank in person if they need to, they'll take general precautions, they'll do it, but they're feeling like they shouldn't have to. Another trend we heard during this study is that sometimes consumers interact in person because they feel the need to. it provides this security or reassurance. So someone we were talking to, they actually won a large sum of money on a game show, which was really cool. And while they generally prefer digital interactions, he talked about wanting to drop off winnings in person. So here he is saying, if it's a large withdrawal or deposit, in the back of my mind, it feels more secure to go in and give it to a person. And it's happening now as I see it happening. So though some simple interactions could be replaced digitally, as we've been discussing, some in-person interactions provide reassurance. So I'll continue on with that participant who said, I went in to deposit this check with more money than I've ever seen before, instead of doing it on my phone, like obviously. So anything that is large enough like that, I'm going to go into a bank to do. Just going in to get a sheet of printed checks feels like something I could avoid doing. It's something that I wish I didn't have to do at all before lockdown. So here you can sort of see that difference between types of activities and the idea that COVID brings in health concerns, but also the general convenience of not having to go into the bank for simple things. So saying feels like something I could avoid doing, but still feeling like there are certain interactions that require reassurance. But here's another example. Another participant says, I would love if I never had to go in again. Because wire transfers are such large amounts of money, it's nice having someone to double check it. But I would also be totally open to a wire transfer tool. The authentication is nice in particular, but it feels like a stand-in for bad tooling otherwise. So here we're sort of hearing that appetite for digital alternatives for certain tasks, and maybe even for more complex ones. But security is really critical to get right here. It still needs to provide reassurance. And it could very easily provide less reassurance if the digital security is not apparent or seems vulnerable.
Yeah, and I think here the reassurance is about not only security, I guess security broadly is how you're talking about it. It's also the stakes are high. If the stakes get higher, I want someone there with me. I need some guidance to make sure I'm not making a mistake. I'm not doing something wrong, because the stakes are too high here. This is more money than I've ever seen. This is a large withdrawal, or this is a large wire transfer. I don't want to send it to the wrong bank.
Yeah.
So that's interesting.
Yeah, definitely.
Yep.
And just coming back around full circle to when we talk about in-person interactions, that sometimes consumers interact in person because they want to. It's their preference. As we said earlier, a third of the participants we spoke to prefer to interact with their financial service provider in person. And here's someone explaining, I think a large part of it is sort of a personal comfort level. You have that one-on-one interaction with people and the ability to ask questions that come up on the spot. So yeah, it's really that personal connection. And they were talking about interacting with a teller in their bank. And so we heard that from many participants that they really value personalization in their banking and investment experience. I'll share another quote. I've banked with them long enough that my daughter was in a pumpkin seat when we first met and set up accounts. And now she's graduating from college. They just watched her grow up, and they interact, they're family. More than, okay, you're so-and-so, but you're the one where your account was hit. And what do we do? What do we need to do today? The next time they knew exactly what was going on. So I bring up this quote because on top of the personalization, many participants also kind of reiterated with us that they've interacted with their bank for many years. And they wanted to share that and explain that they appreciate when they feel like their business is valued. So some examples we heard of what this value meant was a recognition of who they are, remembering their individual circumstances, looking at individual situations, reviewing and waiving overdraw fees. One participant shared about they went to a bank at 5:30 p.m. on a Friday and they needed to stop a payment for a cash flow situation due to the pandemic, and how the bank stayed and helped them through this. So this idea of giving their time and looking at individual situations really made our participants feel like their business was valued. And when asked if banks were meeting or exceeding expectations, or maybe missing expectations. Those who said that their financial service providers exceeded expectations were those that were incorporating, valuing personalization and making participants feel like their business was valued.
This is one that's interesting to me because of, ultimately trust is a topic that's written and spoken about quite a bit in financial services, especially in banking. It's always in play. Money is highly emotional to people. What's changed over time here over the last 100 years or so is like banking has gone digital and it's become less personal in a lot of ways.
Mm-hmm.
And there's probably a whole other study we could do to really dig into the psychology of how this personal connection helps them feel more trusting in terms of where they're putting their money and who they're doing business with, even subconsciously. How some people just knowing their name at the branch helps them feel a little bit more assured that things are going to be okay, even if that's not literally proven in any way.
Mm-hmm.
So there's probably a whole other study we could do to investigate and learn more about that.
Yeah, definitely. And I think even though through this study, that definitely came up, the point you're making as this tension point, that I don't know if you want to share some of your thoughts about, Mike, and what we heard in your experience.
Yeah, sure. This is again more of an observation. Some of this study was a bit of a reminder on certain themes that we've seen for a long time. One that we talk about sometimes with clients is this idea of modality and different modes that customers may be in. With banking in particular, it's a highly transactional relationship most of the time. In a lot of ways, you're just trying to get things done. And when you're trying to get things done, digital convenience really shines because it helps get things out of the way. It can keep you on task. It can be really efficient. It can even avoid you having to move your body. You can stay still and still, deposit a check, not have to drive to an ATM or a branch. So people are in a transactional mode quite a bit until they're not. When they're not, they're looking for more connection and guidance. I think sometimes that's about social connection, which is just, it's part of human behavior, seeking human connection. I think some of that's definitely in play. I think it also gets to trust and sometimes there's a complexity to things that we're trying to accomplish. So I talked about, the stakes are higher. I'd love to enlist somebody's help to be next to me to make sure I don't do something wrong. That's where people want more of that relational engagement. So the interesting thing is there's a Venn diagram with no overlap. You're either in one of these two modes, and often I find that sometimes financial institutions don't recognize that there are two different modes, and they treat you in a relational way when you're in a transactional mode, or in a transactional way when you're looking for more guidance and want more relation. So I think some of that was, continued to come through in this study, and I heard more of that. I don't know what you thought about that, Jen.
Yeah, I think from what we heard in the study, I definitely think so that a single person would switch between these modes. And I think, though, that there is, if we were to build out personas from this, that there's more of a section of participants that maybe are always in this relational mode, or more likely to be in this.
Sure.
And then we heard from a lot, I prefer, I don't want to think about my bank. I don't want to interact with my bank. Let's keep me here.
Right.
But, there could be those moments that shift them in. So I think that could be an interesting thing to look at, like try to find individuals who needed to do something more high stakes or intense during COVID-19 versus those who are kind of in that transactional mode.
Yeah, it's interesting.
Yeah. So we've talked a bit about physical interactions and wanted to see, how do consumers expect their financial institutions to adjust their physical experience as we open up the country? So some may already be going in person, others are wanting to go. What do they expect? So participants expect that financial service providers are implementing social distancing best practices. They are expecting just general safety precautions. And in fact, the overwhelming metaphor that participants used were grocery stores. They wanted the experience to be similar to what they're seeing there. So some examples: providing touchless interactions like automatic doors or not passing debit cards, wiping down surfaces, providing Purell, limiting the number of individuals in a branch, maintaining 6 feet distance, placing markers on the floor, plexiglass between the teller, and requiring everyone to wear masks. This was an interesting point. Some participants kind of explicitly called out the strangeness in wearing a mask in a bank. Previously they've been told they can't even wear sunglasses. So it felt a little strange, but they still expected everyone to be wearing masks.
It's interesting, banks and financial institutions have spent millions and millions of dollars on business continuity plans or disaster recovery plans. And yet we're not prepared for something of this nature. Most of them were not ready. You told the story of turning people away, not being ready to sort of flip that switch. So it's funny, even though we've done all this planning, we still find ourselves, I think, not quite ready to turn the key, turn the valve on until we do more adjustments for some of these social distancing best practices.
Yeah, of course. And that participant sharing that they were sort of crammed in a vestibule, it even seemed less safe
Right.
at the time. Yeah.
Yeah, that's true. Yep.
And one thing to think about in terms of physical interactions is to consider the undesirability of ATMs and cash. So many participants reported a wariness of cash and ATMs and referring to money as dirty in some way. We heard many variations around this theme. I like this participant's quote: "I don't know how, but can they sanitize the money somehow that goes in and comes out? Because that's one thing that I thought at some point, money as a way to transmit the disease. Well, that's scary. So ensuring our money is laundered, but not in the bad way." So several participants, stated these thoughts. And in fact, they would mention that this was something that they had thought about even before COVID,
Right.
This idea that money can transmit germs or and is dirty, but it's so relevant now and top of mind that it's resurfaced. So participants try to be careful when handling cash. They're sanitizing after handling directly. But there was also this idea of uncertainty and just not sure if I should be doing something else. Is this unsafe? Kind of wanting more clarity.
Yeah, you wonder if this will accelerate. We're talking about the pandemic as being an instigator of just more of this transformation activity. It's an accelerator for a lot of that digital adoption and so on. I wonder if it will accelerate more of the cashless transactions that, I know I rely on them quite a bit, and I tend to be an early adopter on those kinds of things. But
Yeah.
Again, I wonder if some folks have used Apple Pay for the first time because they didn't even want to bring out their ATM card or touch the keypad and so on. I'd love to not rail against the ATM. I have a personal mission. I just like the ATM as an experience is just so miserable. How about the fact that there's just not a common UX language across ATMs? I just wish there was a common user experience. I do know it's a key banking outlet for rural areas. So it does provide service to some folks that need it. I'm more urban in nature, so I take ATMs for granted a little bit, but I was talking about the cascade effect of digital being so much better, maybe lines being a lot shorter, and I sometimes feel like the tellers are like, "Come in, please," So if you walk into the ATM lobby that's typically in the front of a branch, why in the world would you stop and use that if you can just walk in and really interact with a person? So that's been a bit of a change in behavior, probably because of all those investments in digital that have just changed a little bit of the vibe and a little bit of how that experience has flowed.
Yeah, there was one participant who shared a story. This has its own exposure implications, but they talked about how they could use the ATM outside or they could go into the bank, and it was like, oh, there's the people who work there are so friendly, and there's a bowl of candy, and like, I'm gonna go in for the candy. Now less so, because they don't want to be touching so many things, but this idea of, yeah, I prefer digital, but there's no line. I'm just gonna go in.
People are funny. I know it wasn't the same participant, but people are funny in that they might say, the money's dirty. I don't want to touch money. And then the same person might say, but that candy jar, I really can't get away from the candy jar. And it's got the same
Yeah.
challenges.
Yeah, and I think that kind of this theme is that there's a wariness of ATMs and cash,
Yeah.
but they didn't know what they should do about it,
Right.
So you say they're careful, they're sanitizing, and they're like, should I be doing this? But still kind of going with those actions.
Yeah.
And we've talked about the physical space a bit, but just in general, how has COVID-19 changed consumer expectations of their financial service provider? So what we heard reiterating is that consumers expect the basics. One participant said it nicely, it's not going to be much different, COVID or not COVID. So what are these basics that consumers are expecting? The first is functionality. Someone said, I don't expect anything more, just to keep their applications up to date and their website functioning. And this is something that I think has gone well during the pandemic, is the continuation of service. Participants didn't feel any interruptions to functionality, which I think why some of the interactions and expectations haven't changed drastically. The second key expectation is availability. In general, participants appreciate when banks are open, both in person, over the phone, after the workday, on weekends, to be able to get help when they need it. And that's particularly critical during this time, that someone's use, their modality is available. So here's one participant complaining, my mortgage provider has been absolutely terrible. There's no way to get in touch with them about the mortgage forbearance program. I'm just looking to see if they're participating, but they've been very difficult to get a hold of. As far as I can tell, there's no way to do so online. They have a letter mailbox to send paper mail. So this frustration around availability is exacerbated during this time, and just like needing to have a way to connect, to ask questions. And the third key expectation is simple yet robust security. Participants stated throughout the study that security is critical. They expect secure transactions. However, many have experienced challenges with security on some of their interfaces. So difficulty remembering passwords, or not being able to sync a password manager. Maybe they've forgotten their password, or the list of requirements when setting a new one is not transparent. Not having biometric authentication, or a cumbersome login process. And when more digital banking is happening, consumers need to be able to get in. So here's a participant stating, too many times I've tried to go in and do something very quickly, and I can't, because I can't get through all the security protocols. So I just want to reiterate here that it still needs to be secure. But if there's a way to simplify that login protocol, perhaps through biometric technology. And besides the basics, one thing we heard, which was really interesting, was that there's a human element as well. With the financial impact of COVID-19, participants expect banks to consider each customer-specific situation and waive fees when possible. A lot of individuals want, and we should acknowledge here that there's a lot of suffering happening because of COVID. And participants didn't want to feel like their bank was financially benefiting from the situation. So here's one participant saying, my biggest expectation is that they don't use this to line their pockets. I don't want them to think that it's going to be okay for them to charge higher rates or make it harder for people to have accounts. So there was this general wariness and concern around fees, and what banks were doing before COVID-19. And this has really inspired this desire for empathy. And even if it wasn't for the participant themselves, they were sort of thinking of others, and they just wanted to know, they were interested in knowing what banks were doing for those in financial need. And it wasn't just for consumers. Another interesting to note is that several participants expressed that they wanted to make sure that financial service providers were protecting their employees, both safety in terms of physical location, if they're going to be working, making sure they're safe, but also job security. They wanted to know that employees were still employed and keeping their jobs and their benefits. Any other thoughts here, Mike?
No, I guess I was a little surprised about the reflection on bank employees and how much that came through the study. So, making sure they're safe, making sure that they're taken care of. In some ways, the pandemic did bring out an altruistic streak in people and a good thing, the good in human beings. So it's good to hear some of that reflected. Be a good citizen is what a lot of folks were saying, and take care of your customers and take care of your employees. That was pretty pronounced throughout the study. So it's good to hear, actually.
Yeah, definitely. And so from here, we appreciate the time to share some of what we learned from this research study. We also wanted to relay some ideas we had in terms of an action plan based on this information. So, what we were just discussing, demonstrate how you value your customers and employees, and some ways, specific examples, decreasing and communicating processing times. We heard in the study, just in general, there's a dislike on phone trees, and especially if anticipating higher call volumes, considering ways to provide direct call-in numbers, listing wait times, appointments, callback services. Show customers that you value their business through language, recognition, leniency, and communicate how you are both supporting customers as well as employees during this time. We also see this as a call to continue to invest in the digital experience, which may seem obvious, but just to when we spoke to individuals, really appreciated the quality and convenience of digital tools. So kind of want to call that out as something that's going well. But maybe ways to find additional interactions to delight consumers, secure and easy ways to log in to these digital tools, ways to securely connect with bank representatives. So if you're going to bring that personal element into it, making sure that it's very secure. And as a researcher, of course, I'm passionate about user research and usability testing of concepts and designs.
And I mean, I think you say that one is obvious, Jen. And, of course, we would always say, continued investments there. You'd be blind to the culture to not see that, digital usage just continues to grow every year. But I think one of the things that may not have been obvious that was uncovered in this study is this notion of people using features for the first time or going a little bit deeper. And so maybe the user profiles are much more wide than they used to be. So that's something that's where investment would help and ensure that everybody has a great experience, even those that are more novice level, perhaps, with some of the new features that they're experimenting with.
Yeah, that's a great point, Mike. And thirdly, provide safe alternatives for banking in person. So regardless of the medium, having a range of operating hours, incorporating social distancing and cleaning best practices, having communication of in-person protocols, how to handle cash, making it clear what to expect, whether you're going to go to a provider in person or if you're interacting with physical money. And then also thinking about ways where you can potentially experiment or innovate in problem spaces that have historically been in-person interactions. Who would have thought we would have had mobile deposit? Are there other ways we can go in that direction to both bring delight, but as well as safety and additional convenience to consumers that have previously been restricted to in-person interactions?
Yeah, with the safety and health side of it, especially around cash, some of that is about communication for sure. It's not only the thing that you do to ensure that, cash is a clean experience, but also it's how you talk about it and how you communicate it visually, you know, where that's dispensed, maybe the ATM, maybe at the teller itself. You know, it's a little like what the hotels are struggling with, not only making sure that they clean all rooms and all spaces so that people feel safe, even despite the fact that some of the research I think has shown that the transmittal from surfaces is not quite as bad as we thought it was originally. But a big part of what they're doing is putting a lot into the communication with both PR, but also just in the experience itself. I don't know if you've seen, they put a sticker over the door so that it's, you know, you're reassured that it's been cleaned. And they've invested in some new technologies that have helped them deliver that clean experience, and then have shown that in video. So some of it is not only what you do, it's how you make sure people know that you're doing those things so that they can feel safe.
Yeah, exactly.
Mm-hmm.
So with that, switch over here. I appreciate the opportunity to share what we learned. Happy to take any questions.
Yeah, great job, Jen and Mike. This is Ryan here. I've been monitoring the questions dashboard, and I have a few here from a couple attendees, and want to encourage those still listening to please ask any questions they may have using the GoToWebinar control panel. Simply expand the questions section and type in your question, and we'll get to it after these first few. So the first one here, have you heard anything around communications that financial services are providing at this time to consumers?
Yeah, I know we were just talking about the importance of communication, and we didn't get to dive in detail, but that was part of the expectation as well. Communication, transparency. Sorry, can you still hear me? I think my Apple Watch triggered my audio for a
Yeah, I
moment.
thought that was me. I heard Siri pop up there. Yes.
Yeah. Or maybe, I don't know. I heard it come into my ear. Yeah, and so people are expecting communication. We did sort of hear around, you know, people are getting a lot of emails, and they might tune them out. I don't think it was too much of an annoyance, but I think you have to be careful around the fact that people will ignore these messages. So maybe not to mix too many different communications within one message. I think we heard a little bit too about, I think this goes back to the idea of when to be transactional and when to be personal. One participant shared that her personal phone number was text. She got a text, and that felt too intrusive. You know, so just balancing how you're communicating and what's going into those messages.
Yeah, there's a big, I think, thrust of the communication early that was much more focused on the financial side of things versus the health and safety side of things. For example, a lot of the government programs and loan interfaces that had to be brought online fairly quickly, and some of the requirements around those, which were somewhat controversial at the time. So I did see a big wave of communication really focused on some of the logistics of that, also some of the reassurance about being, you know, helping you through a tough financial time. And now I'm starting to see, I think, a pivot to more of a health and safety angle, but I haven't seen anything that stood out necessarily yet in terms of best practices or things that seem brave or courageous, but I'm definitely on alert for those.
Excellent. And the next two questions are very similar, and they cover bridging the physical and digital worlds. For instance, pre-ordering or arranging a specific bank task so that they are performed quicker after entering the physical location. Any sense that banks are leaning towards that or are looking to implement an approach like that?
Yeah, I haven't seen evidence of. I've heard discussions of that, and it's really part of more of a macro trend that I'm seeing, where I talked about the adaptability earlier and how companies are on the fly figuring out new ways to deliver everything. And I think the idea of what if you could pre-order and just like with your food, you know, it's kind of already figured out. It's really encouraging to hear financial institutions thinking that way, and they're just starting it. Because the reality is they could have been thinking that way all along, and really what prompted them to be truly innovative in that way has been the pandemic itself. So it's been in some ways the biggest propagator of transformation that's really ever happened. So I haven't seen anything that's been beyond conversation, but the concept I definitely have heard bandied about, and I bet we'll see other things like that where financial institutions borrow from other industries and look to implement similar tactics using, you know, the best of Grubhub and the best of, you know, how Home Depot's doing curbside pickup, and maybe taking all of those best practices and applying them to more of that financial model. The other place they look for inspiration is, you know, healthcare is also doing a lot more. You know, telemedicine obviously has been around for a long time. There's obviously been an explosion of telemedicine, and I've seen that expanded. So, you know, financial companies often look to healthcare because they often have the same kind of constraints, regulatory constraints. So I'm sure there'll be a lot more of that borrowing and sharing across those two industries.
Yeah, and I'll just add, you know, this could definitely evolve over time, but I think one thing we learned from research and to consider there is that there's a subset of the population that still desires this personalized element. We heard from individuals who are using drive-throughs during the pandemic, but they still like look up at the camera and wave, you know, adopting some of these new ways of doing things, but also thinking, is there a way to kind of maintain a personalized element as well?
Mm.
Right on. And the next question is similar to bridging the physical and digital gap, and I believe the answer is no, but I just want to toss it up to you guys. Did your study address the use of appointment setting to enable lobby visits, and if so, what was the perception of this approach?
Do you hear anything about that, Jen?
Yeah.
I know kids specifically, but.
So it wasn't an explicit goal, but participants did bring it up as something that they had the option to do. And I think as I mentioned, things were kind of in steady state, but a lot of participants mentioned, I can go in person if I need to, and I would just make an appointment and do so. So I think there was awareness around it, and basically people will be like, yeah, if I have to go in person, I can just go ahead and do that. There was a little bit around this idea of, as I said, missing that ability to drop by a bank, and it sort of takes away from that. But again, you know, this appreciation of the continuation of service and willingness to do that if that is what's needed to visit the bank in person.
I do think in general, you know, even before any of this, just in general, I think as an experience design, people do appreciate the idea that you can do some pre-work and accelerate something that's a pretty tedious activity, which, you know, financial services unfortunately has a lot of those, where in healthcare too, where, you know, it'd be good to get things like paperwork out of the way, or maybe pre-order, kind of like the other question implied, pre-order what you're doing to really make it much more of an efficient experience. So it's not only a safety play where I'm just in the physical location less time, it's also a convenience play where it just feels better to be able to just pull up and it's already done. It's already figured out. I feel like there's a desire to interact with the physical world in a more digital way, where digital is just much more immediate and fast. I think we'll see a lot more of those patterns. And I hope our clients allow us to maybe prototype some of those approaches so we can see what the consumer reaction is to those things.
Well, thank you so much, Mike and Jen, for your insight and time. There's certainly a lot here to unpack and think about. Rich and Maggie, if you're still watching, I do see we have your 2 questions that we haven't got to yet, but we're going to end here just to be respectful of everybody's time, and we will get you answers to your questions after the webinar here. I'll collect some feedback from Mike and Jen and get it over to you. But thanks again, Mike and Jen, and thank you everybody for tuning in. Hope you have a great July 4th.
Great. Thanks, everybody. Thank you, Jen.
Thank you.
Bye.